What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief show. We got a lot to talk about. Let's get into it. All right, welcome back. So first off, I just want to talk about the week ahead. We have the CPI data coming out at 8:30 in the morning tomorrow, and it's earnings week as well. We have the banks, the financials reporting here very shortly, starting with JP Morgan, Goldman Sachs. Now, the financial sector did fairly well today. You can see up 1%. It was the leading sector in the SP 500. So this to me is not necessarily a bad sign. It signals that earnings can be better than expected. So, we'll see if this momentum wants to continue to carry. There are a few things that I'm a little concerned about. One being breadth. Early in the morning, breadth was not all that great in the NASDAQ. The NASDAQ ended up finishing with a positive breadth, and same with the S&P 500. But earlier in the day, it was quite poor. If we look at the dashboard here, looking at the Dow Jones up 0.36%, really relatively flat day overall, and this could be because we're leading into some big data and earnings, so be on the lookout for potentially that. I know NASDAQ, the NASDAQ 100, I should say, had one of its lowest volume days. If not, it was the lowest volume day for the year. We'll get into the indices here very shortly. First off, I want to go on a couple of charts, one that I talked about on my previous video, and this right here is just showing the cumulative advanced decline line for utilities sector. And I want to just call this out that utilities down here has been putting in lower highs and lower lows, period of consolidation. You might be able to call this a flag pattern. But the cumulative line here for the advanced decline percentage line here, you can see it's been putting in a higher high. So it's signaling to me that there's strength moving into utilities. However, the price action hasn't met up with that quite yet. And that's a little bit defensive in my opinion here. And if utilities start to outperform the S&P 500, that could be a risk-off type environment. And as you can see here on the sectors, utilities here finished up 0.33 today. It's not near the bottom, but it's not near the top either, so it's really just middle of the pack. Technology here took a little bit of a breather, same with energies and consumer staples. Consumer staples is another more defensive type sector, and I wanted to call out this chart to go over consumer staples, and this is looking at the relative performance over consumer staples and the S&P 500. So when this goes down, and it has been going down, it's really saying that the S&P 500 is outperforming the consumer staples, right? So consumer staples is more of a risk-off type environment. It's defensive, and you can see here it's breaking down to new lows here for the year. So this signals, okay, yeah, all signs go for risk on or the broad market. Well, one thing that I want to call out, though, is the RSI has been putting in a higher low, so it's showing that momentum is actually increasing here. I mean, it's still really low, but this is known as a positive divergence. So the line here, the relative strength between consumer staples and SPY is putting in a lower low. You can see the RSI putting in a higher low. So positive divergence there. Also, if you just apply a standard rate of change, a 12-day rate of change, or 12 weeks, sorry, I'm looking at the weekly time frame, you notice here it's also doing the very same thing as the RSI. It's putting in a positive divergence. So we have a low to a higher low. Now, I wanted to pull back in history, so I brought out a longer-term chart dating back to 2005 to late 2004. And there's been a few times where this happened. So, for example, leading up to the pandemic, we had the relative strength line heading lower, but we had a positive divergence in the ROC, the rate of change. And then it carried on for a little while, and we had that spike. Also took place in 2007. We know what happened shortly thereafter. The relative performance line was going lower, but we had the ROC, the rate of change, building in strength. So I don't know if this is going to mean anything or do anything. However, it is just something to be aware of that, we have some strength coming into utilities looking at this specific chart here. And then we also have positive divergences building on a defensive sector too as well. Let's hop into the indices right now, and we're going to start looking at the price action, volume, and a couple other various indicators. So S&P 500 also placed a new all-time high today, so continues to just drift higher. It really does match the script of seasonality. Like I said, the breadth in the morning wasn't all too fabulous, and now towards the end of the day, I think we had around 300 advancing stocks and 200 declining off, give or take a few, but that was roughly the ratio there. We're pulling up into the upper Bollinger Band. It's a place to be somewhat cautious, but still price action tells us this technical chart is extremely bullish. If we look at the 15-minute time frame today, there was no price discovery at all. We gapped and we just kind of just drifted, levitated higher, despite that we had earlier in the morning we had more declining stocks than advancing stocks. It didn't really matter. The broad market continued to press up higher here. You can see that the divergence here in the RSI, it put a high to a lower high, so negative divergence where you had the price action putting in a higher high, and then you had the the PMO indicator here was also kind of just lagging, but it is still well above zero. So price is kind of just dragging, levitating higher. We have a lot of economic data coming out tomorrow, and we have big earnings. So it's going to be very interesting environment. And I'll talk more in the conclusion of just kind of what I'm doing. Dow Jones Industrial Average, this one to me looked the best. I posted it on Twitter. I said this to me looks like the opportunity here. As you can see here, we broke out to an all-time high. We didn't reach an all-time high, but we closed at an all-time high right here. So good stuff. It broke out of this resistance. So this resistance might be coming into support. So we'll watch the industrials. Now, I'll bring up the transports later, but the thing is, you want to track the transports and the industrials because the transports, they've been lagging significantly. So to really see the Dow Jones Industrial start to take off here, it would be really nice to see the transports all of a sudden start to pick up some speed here because they've been lagging behind. And one has to catch up to the other, whether it's the industrials catch to the downside or transports start just finding some strength, catching a bit here soon. If you look at the DIA, this is the ETF on the 15-minute time frame for the industrials. Gap, like I said, levitated higher. Just it's been boop, 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 levitating higher. We saw a little bit of weakness earlier in the day, but it was just caught back with just a slow grind higher. You can see here also the negative divergence in the RSI, and the same thing with the PMO. If we look at the NASDAQ 100, this had the lowest volume day for the year. The NASDAQ 100 did. If you look at this little candle, this price action up here, doji, which means indecision candle, right? Now, we looked at the TNX in prior videos. That's the 10-year yield. When the 10-year yield goes up, puts a little bit of a damper on these growth stocks. Although we did close at an all-time high here, so that's bullish. It just be bullish, be cautious here. We've been on one massive run, and we haven't really digested any gains. You might say, okay, well, we had that gap down, but it was quickly then reversed. So the price action, like I said, everything's in bullish conditions. It's just you need to be a little bit cautious in this environment as we have a lot of possible things that can go wrong, whether it's the market interpreting the CPI data incorrectly or not incorrectly, sorry, if it interprets it as bad, say, there is a big shock to inflation or the number ramps up higher, which I don't necessarily know if it's going to continue to ramp where it's at as of right now. There's going to be a month-over-month period where it does decline and or kind of just stagnate a little bit. So we'll watch it. But indecision type candle, big green candle. So it says momentum was very strong. Now it's kind of taking a little bit of a pause here. We'll watch. The price percent oscillator has been losing momentum here on the histogram. So like I said, we'll continue to monitor it as the price actions above the upper Bollinger Band, or just right at the upper range of the upper Bollinger Band, and the RSI's clearly up there above 70. So it's considered overbought, overextended. All right, here's the cues on the 15-minute time frame. From bottom left to the top right, the 5-day moving average is nicely sloping up here, inclining. We have resistance right at about 363. I think if we start getting over that could be a really good sign that we can continue to press higher. Be careful on big gap ups that might give us to an overextended reading here on the RSI. Those might get sold into. This is kind of the environment that you want to sell the rips and then you buy the dips, and you just got to be careful and monitor your risk as time goes. Price, the PMO down here is still above zero, and it looks like it wants to do a bullish crossover. So this, to me, doesn't look all too horrible on the 15-minute time frame. Now, the IWM, this has just been in a period of consolidation here for multiple months, And, we caught a little bit of a bid down here. This was extended severely outside of the lower Bollinger Band. And we're kind of getting a little bit of a bid back. I don't see a strong trade here at this particular point in time. I would want to see it clear above 232 to continue its move. Now, if that's the case, then I will definitely see some very good opportunities within the small caps, and that can really press the overall broad market up higher too as well. So we'll pay close attention to what small caps do here in the remainder of this week. Here on the 15-minute time frame, you can see that the chart has really just been going sideways. The 5-day moving average, it's been like spaghetti, right? Down, up, down, and still declining at this particular point in time as the price action's now just getting above it. We're going to see this start to flatten out to incline to feel a little bit more confident that the short-term trend is starting to find its footing. Let's go look at a couple indicators here. This is the sell signal that I like to use when the CPC, smooth over a 10-period moving average, crosses from under 8 through 8. So from the bottom here through this red line, that is that sell signal, warning sign. It doesn't mean, go short the market. It means pump your brakes a little bit because things can get a little rocky. And this last time it did it hardly crossed back down the very next day. The market didn't do anything, right? So that was a false signal. Over here, though, you can see we crossed from bottom through it, and then we rolled over. Crossed through it here, we rolled over. Crossed through it here, we rolled over. Crossed through it here, we actually were already rolling over, rolled down a little bit more, so not much. And then right here was also a false signal. So there are some false signals, and it works good. Really, there's nothing that's the holy grail here in trading, but if we do cross through it, and you see the CPC continue to click higher, just note that you should pay close attention to wherever your stop losses are. Make sure you update them or take profits if you've been making profits, and then you can look for specific pullbacks or dips to buy into individual names. Now, it's not to say that the market's going to roll over 5%, 10%, 2%, whatever the case is. Okay, we use price action, volume, support, resistance in order to find that kind of stuff. But it is just letting us know that if we cross above there, just to pump your brakes a little bit. And if you look at the BP SPX chart, we talked about this on the last video, positive divergence, it got overextended. We saw that bounce to all-time highs today. That's never a bad thing right here, so that's a good sign. If you look at the, oops, this was kind of smaller. Let me just make that bigger. There we go. We're looking at the value line geometric index. You want to see these match up, move hand in hand. When they build divergences, it could be a little bit rocky as well, and we've been building a divergence here in the XVG. It's been putting in lower highs where the S&P 500 has just been grinding higher. So it's something to track and watch. I will say the XVG looks like it's in pretty bullish context right here as it recaptured the 50-day moving average, but keep in mind we still have this downward sloping trend line to get through. If we get through that, I mean, there's no reason why the S&P 500 can't continue to just keep pressing higher and higher here in the very near future. If we look at the NIA, this is looking at NYSE advanced decline volume, still sloping down, so it's diverging with the price action, something very similar that took place during early 2020 as well. So it's something that we're tracking and monitoring. It's nothing has played out from this yet. As you can see, the price action continues to build, but just know that while internals are weakening, and the broad markets continue to levitate, like I said earlier, one has to catch up with one another. And if it's going to catch to the downside, while these divergences continue to build over a course of time, it could be an aggressive move. If you take a look at breadth, this is the NYSE McClellan oscillator. Also, once again, just weak overall. It's just non-existent. Like we're pushing all-time highs. You'd think you'd get a thrust up, but we really didn't. We're still there below zero. Let's look at a couple sectors, industries, transports. We mentioned this earlier today. Transport's just been lagging lower. You can call this a diamond formation right here, or you can call it a triangle. Either way, if it results to the downside, it'd bring us to right around 14,650 to just a little bit lower. If it results to the upside, it can take us above this previous area, this band of resistance, and that would be actually a good sign for transports. We do, I believe, have some airlines here reporting too. It might be this week. I can't remember. I don't have it in front of me. Actually, wait, maybe I do. Yes, I do. Morgan Stanley, Kansas City, Delta Air. Yeah. So we have some like airlines. I don't know what else, but I thought I saw something. So Delta Air is reporting. We'll see what that go. We'll see what happens there. I don't know what to expect with all of that. I haven't looked too deep into it. Let's look at the banks really quick. Banks also just screaming higher. We actually talked about that on the previous video. As the TNX, the 10-year yield was getting overextended to the downside, it made sense that we'd see some sort of positive move in financials, because when the 10-year yield starts to rise, it's a good sign that we might start seeing banks rise too. And so the BKX, largest 24 institutions, we saw it just rip higher from 119 to around a high of 126 in just 2 days time. So very, very fast, aggressive move. And we have earnings coming out. So this could be the market interpreting good things to come. We'll see. Semiconductors also very important to the overall market. Did catch a nice bid here today. A little bit overbought here on the 15-minute time frame. We're coming into this previous area of resistance right at around 260, 250. All right, so this big move, you don't want to chase it. You want to see it digest a little bit. So maybe it pulls back, finds its legs, and then takes out 260. Then I'd feel confident from catching above 260 to 262 to potentially higher. Let's quickly look at commodities. Bitcoin's making the headlines today, same with Ethereum. We'll just talk about Bitcoin right now. Why is it making headlines? Well, it's been trending sideways, but it's down around 4% on the day so far. And, it's clearly it's in bearish context, right? So this big move right up here, they call that a stage 2 markup, just a markup phase. Then it goes into a stage 3, which could be a period of distribution. Stage 4 is decline. So this could be potentially an accumulation, a stage 1 right here. But the unfortunate thing is we've been putting in lower highs and lower lows. So the price action hasn't really gone anywhere. We need to see it get above 40,000 to feel a little bit more confident. If it starts breaking below 30,000, which is kind of this band of support here and from over here, then we might be a little bit more trouble where it can take a quick hit down to around 25,000. Now, I don't have the chart that I was looking at, but in stock charts, I applied an anchored VWAP, and an anchored VWAP allows you to measure volume, price, and time, and I like to put that on specific breakouts or specific big news events. And I measured it way back when we had this breakout of a symmetrical triangle on a weekly time frame. And what I found interesting on the breakout measure and the retest measure, it literally pinned us right in this tight little area right here. So it makes me think, okay, well, if we start breaking down, it's going to try to find its next level, and its next level that I measured was around 25 to 26,000. So that's the level that I'm watching if we start breaking below 30,000. That's the short term. We got to see if it does get there, and then we got to see what price action is telling us then. Price percent oscillator on here also looks like it's about to do a bearish crossover below 0. So it's not a good thing. Also note too, the RSI has been struggling to get back above 50. So momentum here, it's dying off too. It's going to take a lot of work for the bulls to recover and recoup this. But, from a bullish perspective, I mean, it could be potentially bottoming. I'm not going to put my money on that as of right now because it's just so much more work to do. I just don't see it just taking off right here. But like I said, if we get a couple days of strength and we start recovering the 50-day moving average, then we'll see what takes place from that point. 26-day cycle there on gold, 26 trading day. This is Tom McClellan pointed this out. Every 26 day tends to be an area that acts as a strong pivot. Well, we moved up here. It was a pretty rough day at the beginning for gold, but then we caught a bid back. Still below this lower trend line. Perhaps we do start catching a bid here. It's hard to say. So we'll continue to monitor it. I don't see a trade at this particular point in time. If we start breaking out, hey, maybe we go try to get retake out this level, which is about 1920. If we start heading lower and take out this 1760, I think it's possible that we continue to head to around 1700. I don't see why we wouldn't be able to reach down to those areas if it breaks down through this swing low right here. And then oil also saw just slight weakness on the day, but it's still overall in a very bullish trend. You can see here it's above the 20-day moving average, acted as support 50, 100, and 200. So energy sector is still one of the strong performing sectors. And until oil, something crazy happens in oil, maybe we'll see the energy sector lag a little bit more. How did the energy sector finish today? The energy sector, I didn't have it in front of me. Let me see. Energy. Yeah, it finished down 0.15%. These dips, in my opinion, will probably end up getting bought. We'll see. But that's such a small, it's relatively flat. As you can see also with oil, it was pretty much flat on the day. It was down 0.62%, down 0.46 cents there. So nothing crazy. All right, everybody, that's all I got for you on today's episode. This is what I'm kind of doing with my own portfolio. I have long exposure in some various stocks. I'm not shorting this market. The price action tells me not to do that. Everything looks like it's really bullish. I got small exposure in tech, but it's very light exposure, and I'm using options in order to get that exposure. I'm looking at some industrial plays. I'm in some industrial names, and I'm in a heavy percentage of my portfolio is in cash. Because of these divergences and this issues that I'm seeing behind the curtains, I don't want to fully press hard right now. And, some people agree with that, some people don't. That's just my personal style. But if there is some sort of a rug pull, I want to be able to have opportunity cost ready to go in those areas. So I'm looking, like I said, I'm on the belief that we're going to have a reflation trade, or we're going to get back into cyclicals, and value stocks are going to start cashing their bids again. Like banks, for example. Banks have been getting pretty beat up. We have airlines that have been getting beat up. Disney today, it was a very strong performer. It was up 4 or 5%, which actually printed green for my option trades that had been down in a single day. It brought it into the green, so that was quite nice. So I'm looking for value, I'm looking for cyclical, and I'm just playing very cautiously at this particular point in time. That's all I got for you on today's episode.